closing costs? What are those? How do they get paid? So, you've been saving money for a down payment and you're finally ready to buy a house. You finally have a little nest egg and you're ready to get approved for a mortgage. And your loan officer starts talking about closing costs. What the heck? I know exactly where your brain has gone. What are closing costs? Do I have to pay them? How much are they? Seriously? I was just saving money for my down payment. Now I need more? I don't have time to save more money. My lease is almost up. Okay. First, let's talk about closing costs. What are they? Closing costs are the costs associated with the origination and closing of a mortgage. This can include any of the following: processing and underwriting fees, appraisal, credit report, flood certificate, title and escrow fees, recording fees, property taxes, home insurance. This is not a complete list of closing costs. Different loan programs and property types may have specific costs associated with them. Now we know what closing costs are. How do you pay for them? And how much are they? Closing costs will depend on the purchase price and loan amount of the property you're purchasing. For a quick calculation, you can estimate about 1.5% to 2% of the purchase price for closing costs. For example, if we buy a $500,000 house, your closing costs will run between $7,500 to $10,000. So, did you save up enough extra funds to cover both your down payment and closing costs? No? Don't freak out. It's okay. We have solutions for that. Let's talk about your options. You can ask the seller to pay them for you, up to the maximum allowable for the loan program you're applying for. This is not uncommon depending on what the current real estate market is like. Why would a seller do this, you ask? Well, for you, the closing costs are hard-earned cash dollars coming out of your bank account. For the seller, it's a line item on their net proceeds statement from the sale of the home, rather than money coming out of their bank accounts. This can also help the seller move on to their next chapter sooner too. You can roll the closing costs into the purchase price of the home. How does that work? Go back to our example earlier. We said closing costs for our $500,000 house purchase would be between $7,500 and $10,000. Okay, let's say the lender works up estimated costs and the closing cost estimate is $8,000. You write your offer price for $508,000 with a seller credit of $8,000. It's that simple. Then the same bottom line applies, just like if the seller were paying your closing costs in the option above. The difference here is that the seller is not netting any less money on the sale of their house. They get the same amount of money, just like if you were to pay your own closing costs. Pretty cool, right? You can request a lender credit to pay those closing costs. Now, let me be clear. This is not free money given to you by the lender. Typically, when the lender gives you a lender credit, the cost of the credit is passed on to you with a slightly higher interest rate. Let's be honest, the lender's not going to lose money on a transaction. Most lenders I know are for-profit businesses. Everyone's situation is unique, so it's best to talk with a professional about the option that may be best for you. Feel free to DM me if you have a specific question too. I'm always happy to help.